forget to subscribe to our YouTube channel, PMC Information. We are there on X and you can subscribe. Also, we are there on WhatsApp where you can discuss a lot of things.
Hey everyone, Elon here. I need to talk to you about something really important that just happened in the cryptocurrency markets, and I'm specifically speaking to the older generation right now. The boomers, the retirees, the folks who've worked their entire lives and are trying to figure out how to protect your nest egg and maybe grow it a little. I know a lot of you have been hearing about Bitcoin and Ethereum and all these cryptocurrencies. Maybe your kids or grandkids have been telling you about them. Maybe you've seen commercials during football games with Matt Damon telling you fortune favors the brave. Maybe you even put some money in because everyone was talking about Bitcoin hitting $126,000 and you didn't want to miss out. Well, something massive just happened over the last 2 days, and I want to explain it to you in plain English. No jargon, no technical nonsense, just straight talk about what happened, why it matters to you specifically, and most importantly, how to protect yourself going forward. This isn't financial advice, I'm not your financial advisor, but I am someone who understands technology and markets and risk, and I've made plenty of mistakes myself. Trust me, I've lost billions on paper multiple times, so let me share what I've learned. Here's what went down. On October 10th and 11th, 2025, the cryptocurrency market experienced what we're calling the crypto bleed. President Trump announced a 100% tariff on Chinese goods. Now you might be thinking, Elon, what does that have to do with Bitcoin? Well, everything. When major governments start economic wars, investors get scared. They start selling risky assets. And crypto is considered one of the riskiest asset classes out there. The numbers are absolutely staggering. $19.16 billion in cryptocurrency positions were liquidated. That's not just the market going down. That's people's actual money, gone, wiped out, vanished into thin air. To put that in perspective, during the COVID crash in 2020 when the entire world shut down and we thought civilization might collapse, crypto liquidations were $1.2 billion. This was 20 times worse, 20 times. Bitcoin dropped from its all-time high of $126,000 down to around $119,000. That's a 10% drop in hours. If you had $100,000 in Bitcoin, you woke up with $90,000. Ethereum was even worse. It fell 21% from its peak. Some of these smaller cryptocurrencies, what they call altcoins, fell 50 to 60%. Some people lost their entire life savings overnight. Over 1.5 million traders were affected. That's 1.5 million people who woke up to margin calls, liquidation notices, and evaporated portfolios. Now, here's what really concerns me. A lot of those people were using leverage. That means they were borrowing money to buy more crypto than they could actually afford. It's like taking out a loan to go to the casino. And when the market dropped, not only did they lose their own money, they lost borrowed money, and now they owe even more. Let me tell you something about leverage because this is critical for you to understand. Imagine you have $10,000. With 10 times leverage, you can control $100,000 worth of Bitcoin. Sounds great when it goes up, right? If Bitcoin goes up 10%, you just made $10,000 on your $10,000 investment, you doubled your money. But here's the thing. If Bitcoin goes down just 10%, you lose everything. Your entire $10,000 is gone, and if it goes down more than that, you actually owe money. That's what happened to over 1 million people in the last 2 days. They got completely wiped out. Now, before I go any further, I want to ask you something directly. Have you invested in cryptocurrency? If you have, I need you to take a deep breath right now. Don't panic. Don't immediately go sell everything. Panic selling is how you lock in losses permanently. The market is volatile, yes, but making emotional decisions in the middle of chaos is usually the worst thing you can do. If you haven't invested in crypto yet, good. Pay attention to what I'm about to tell you because it might save you from making a huge mistake. And if you have invested, what I'm about to share will help you understand how to protect what you have left. Let me explain why this crash happened, and it's not just about Trump's tariffs. The crypto market had been on an incredible run. Bitcoin hit $126,000. People were euphoric. Everyone thought it would just keep going up forever. And when everyone thinks that, that's usually when things are about to fall apart. The market was over-leveraged. That means too many people had borrowed too much money to buy crypto. It was a house of cards waiting for any excuse to collapse. The tariff announcement was just the match that lit the fuse. Here's what most people don't understand about crypto. It trades 24/7, 365. Unlike the stock market that closes at 4 p.m. Eastern Time, crypto never sleeps. So, when Trump made his announcement after the stock market closed on a Friday evening, crypto was the only major market still trading. All that fear, all that panic, all that selling pressure went straight into crypto because it was the only thing available to sell. It's like if there was a fire in a building, but only one exit was open. Everyone rushes to that one exit, and you get a stampede. The weekend timing made it even worse. Traditional markets were closed. The big institutional investors who might have stepped in to stabilize things, they were gone. It was just retail traders, individual people like you and me, panicking and selling to each other at lower and lower prices. By the time Monday morning came around and the stock market opened, crypto had already taken the full brunt of the panic. Now let me talk about something that really concerns me for seniors specifically. I keep seeing these advertisements targeting older people, telling them to put their retirement savings into crypto. They show you charts of Bitcoin going up and up and up. They tell you that you missed the internet boom, you missed the tech stock boom, don't miss the crypto boom. They make it sound like free money. And I'm here to tell you, it is not free money. It is extremely risky money. Here's the reality. Crypto is speculative. That's a fancy word for gambling, but with slightly better odds if you know what you're doing. The problem is, most people don't know what they're doing. They see the price going up and they want in. They hear about their neighbor making money and they feel left out. Psychologists call this FOMO, fear of missing out. And FOMO is one of the most dangerous emotions in investing. Let me tell you what happened to a lot of seniors over the last 2 days. They had taken money from their retirement accounts, their IRAs, their 401ks, money they needed for healthcare, for living expenses, for their grandkids' college funds. They put it into crypto because someone told them it was the future. And now that money is gone, not down temporarily but actually liquidated, turned into zero. I've been building companies for decades. Tesla, SpaceX, Neuralink, I understand risk. I've bet everything I had multiple times. But here's the difference. I was betting on technology and companies I controlled. I understood the products, I could influence the outcome, and most importantly, I only risked money I could afford to lose. When I put my entire fortune into Tesla and SpaceX back in 2008 during the financial crisis, I knew I might lose everything, but I was young enough to start over. I didn't have a family depending on that money. For medical bills, if you're in your 60s, 70s, 80s, you don't have that luxury, you can't start over. You can't work another 30 years to rebuild your savings. Every dollar you lose is a dollar you needed for your retirement, your healthcare, your quality of life. That's why I'm making this video, because I'm genuinely worried about how many seniors are being sold a dream that's actually a nightmare waiting to happen. Now, let me be clear. I'm not saying crypto is worthless. I'm not saying Bitcoin is going to zero. In fact, I own Bitcoin. Tesla owns Bitcoin. I think blockchain technology is genuinely revolutionary and will change the world. But there's a massive difference between believing in the long-term potential of a technology and betting your retirement on short-term price movements. Here's what you need to understand about crypto volatility. Bitcoin dropping 10% in a day is actually pretty normal. It's dropped 50% multiple times and recovered. Ethereum has had even bigger swings. This is not like the stock market where a 5% drop is considered a crash. In crypto, 5% is a Tuesday, 10% is a bad day, 20% is a really bad day, but not unprecedented. 50% means we're in a bear market, but it's happened before and we recovered. The question you need to ask yourself is this: can you emotionally and financially handle that kind of volatility? If you put $10,000 into Bitcoin today and tomorrow it's worth $7,000, can you sleep at night? Can you hold on without panic selling? Can you afford to lose that money if it goes to zero? And, I mean really afford it, not just convince yourself you can. Most seniors I talk to, the honest answer is no. They can't afford those kinds of swings. They need stability. They need predictability. They need to know that the money they saved for 40 years isn't going to vanish because some president announced tariffs on a Friday night. So let me give you some straight talk about what you should do. If you haven't invested in crypto yet, I strongly suggest you think very carefully before you do. Ask yourself why you want to invest. Is it because you genuinely understand the technology and believe in its long-term future? Or is it because you're afraid of missing out? If it's the latter, that's a bad reason to invest in anything, especially something as volatile as crypto. If you do decide to invest despite everything I'm telling you, here are some rules. Never invest more than you can afford to lose completely. And I mean completely. If losing that money would affect your ability to pay bills, buy medicine, or maintain your lifestyle, then it's too much. A common rule is no more than 1 to 5% of your total portfolio should be in highly speculative assets like crypto. So, if you have $200,000 saved for retirement, that means $2,000 to $10,000 maximum in crypto, not $50,000, not $100,000. Definitely not all $200,000. Never, ever, ever use leverage. I cannot stress this enough. If someone is offering you the ability to trade crypto with borrowed money, run away. That's what wiped out most of those 1.5 million people. They thought they were being smart by using leverage to amplify their gains, but they didn't understand they were also amplifying their losses. You can lose more than you invested. You can end up owing money. It's financial suicide for most people. Don't day trade crypto. You are not going to outsmart professional traders who have algorithms and supercomputers and teams of analysts. You're going to get destroyed. If you invest in crypto, you invest for the long term, meaning years, not days or weeks. You buy, and you hold through the volatility. You don't check the price every hour. You don't panic sell when it drops. You accept that it's going to go up and down wildly and you're in it for the 5 to 10 year horizon. Use only regulated exchanges. In the United States, that means places like Coinbase, Kraken, Gemini. These are companies that follow US regulations and have some level of oversight. Don't use some sketchy exchange you heard about from a random YouTube video. And definitely don't give your money to some person who promises to trade crypto for you and give you guaranteed returns. That's a scam, I guarantee it. Understand what you're buying. Don't invest in things you don't understand. If someone is trying to sell you on some new coin that's going to replace Bitcoin and make you rich, be very skeptical. 99% of cryptocurrencies are garbage. They're created to make the founders rich and leave everyone else holding worthless tokens. Stick to Bitcoin and maybe Ethereum if you're going to invest at all. These are the established ones with real networks and real usage.
Now, if you already invested in crypto and you're sitting on losses right now, here's what you need to do. First, assess your situation honestly. How much did you invest? How much is it worth now? Can you afford to hold it long term? If you invested money you need in the next year or two for living expenses, you probably need to get out, even at a loss. I know that's painful to hear, but you can't risk money you need for survival on something this volatile. If you invested money you can truly afford to lose and don't need anytime soon, then consider holding. Bitcoin has crashed many times and recovered every single time, eventually reaching new highs. It dropped from 20,000 to 3,000 in 2018. Everyone said it was dead. Then it went to 69,000 in 2021. Then it crashed to 16,000 in 2022. Everyone said it was dead again. Now it hit 126,000 before this recent drop. The point is, if you can stomach the volatility and wait it out, history suggests it will recover, but past performance doesn't guarantee future results. Do not try to time the bottom. You don't know when it's going to stop falling. Nobody does. If you're going to buy more, dollar cost average. That means buying a small fixed amount every week or month regardless of price. This averages out your entry point and removes the emotion from the decision. Most importantly, learn from this experience. If this crash scared you, if you lost sleep, if you felt sick to your stomach checking your portfolio, that's your body telling you that you took on too much risk. When this is over, whether you made money or lost money, adjust your strategy. Reduce your crypto allocation to a level where you can sleep at night. Let me tell you about some warning signs that you're being scammed, because there are so many crypto scams targeting seniors right now. If anyone guarantees returns, it's a scam. Nobody can guarantee returns in crypto. If anyone asks you to send crypto to claim a prize or investment opportunity, it's a scam. If anyone claims to be from a crypto company and asks for your password or private keys, it's a scam. Real companies will never ask for that information. If you see advertisements saying things like double your money in 30 days or this coin is going to 10,000x, it's a scam. If someone contacts you on social media claiming to be a crypto expert who can help you make money, it's a scam. If you're pressured to make a decision quickly, or told this opportunity won't last, it's a scam. I want to tell you about something called private keys, because this is crucial for security. In crypto, you have what's called a private key. It's like a password, but way more important. If someone gets your private key, they can steal all your crypto, and there's no way to get it back. No bank to call, no fraud protection. It's just gone. So treat your private keys like you treat $1 million in cash. Actually, treat them even more carefully because at least with cash, someone has to physically rob you. With crypto, someone on the other side of the world can rob you in seconds if they get your keys. Write your private keys down on paper, not on your computer. Put that paper somewhere very safe, like a safe deposit box. Make multiple copies in different locations. And never, ever share them with anyone. Not your kids, not your financial advisor, not customer support. Nobody legitimate will ever ask for your private keys. Now let me address something important. Some of you might be thinking, well, Elon, you said you own Bitcoin. You've tweeted about Dogecoin. Why are you telling us not to invest? Here's the thing. I can afford to lose everything I have in crypto and still be fine. You probably can't. I invested in crypto when it was much cheaper and I understood it was speculative. I've made and lost more money than most people will see in their lifetime. I'm not a normal investor and you shouldn't follow my investment moves blindly. When I tweet about crypto, the market moves. I've learned that I have enormous influence. And honestly, I've been careless with that influence sometimes. I've tweeted things about Dogecoin as a joke, and people took it seriously and invested money they couldn't afford to lose. That wasn't my intention, but it happened. So now I'm trying to use that influence more responsibly by warning people about the risks. Here's what I think about the future of crypto. Long term, I believe Bitcoin has value as a store of value and a hedge against inflation. I think Ethereum has value as a platform for decentralized applications. I think blockchain technology will be as important as the internet. But short term, it's going to be wildly volatile. There will be more crashes. There will be more regulatory challenges. There will be more scams and more people losing money. The question is, do you want to be on that roller coaster? Because it's going to be a wild ride. Some people will make life-changing money. Most people will lose money. A few will lose everything. Those are just the statistical realities of speculative investing. Let me talk about alternatives for a moment. If you're investing for retirement, there are much safer options. Traditional index funds like the S&P 500 have returned about 10% per year on average over the long term. That's not as exciting as Bitcoin going up 100% in a month, but it's also not going to drop 20% overnight. Bonds are even safer but with lower returns. Real estate can be a good inflation hedge. Diversification is key. The boring traditional approach actually works. Save consistently, invest in diversified low-cost index funds, don't try to time the market, hold for decades, and you'll probably be fine. It's not sexy. It's not going to make you rich quick, but it's not going to wipe you out either. I know this isn't what you want to hear. You want me to tell you that crypto is the future, and you should invest everything and you'll be rich. But I care more about telling you the truth than telling you what you want to hear. The truth is that crypto is risky. The truth is that most people lose money. The truth is that if you're retired or close to retirement, you probably shouldn't have significant exposure to crypto. But I also don't want you to panic if you're already invested. Markets recover. Bitcoin has survived every crash so far. If you invested money you can afford to lose, and you can hold long term, you might be okay. Just don't throw good money after bad trying to average down if you can't afford more losses. Let me tell you what I would do if I were in your shoes. If I were 65 or 70 years old with a fixed amount of retirement savings, I would keep crypto at no more than 2 to 3% of my total portfolio. I would only buy Bitcoin and maybe Ethereum, nothing else. I would use a regulated exchange like Coinbase. I would set it up with strong security, two-factor authentication, the works. I would buy a small amount, move it to a hardware wallet for safekeeping, and then I would forget about it for 5 years. I wouldn't check the price. I wouldn't trade. I'd just let it sit and see what happens. But the bulk of my money, the 97 to 98%, would be in traditional safe investments. Index funds, bonds, dividend stocks, maybe some real estate. Things that aren't going to lose 20% overnight. Things that have decades of track record. Things that are boring but reliable. You didn't work for 40 or 50 years to gamble it all away on something you don't fully understand. You deserve to retire with dignity and security. Don't let FOMO or slick marketing or your grandson's enthusiasm pressure you into taking risks you can't afford. Here's the bottom line. The crypto bleed that just happened was a wake-up call. $19 billion liquidated. Over 1 million people affected. Many of them lost money they desperately needed. Don't be the next statistic. If you're going to invest in crypto, do it smart. Do it small. Do it with money you can lose. And do it with full understanding of the risks. If you're already invested and scared, take a deep breath. Don't panic sell. Assess your situation rationally. If you need that money soon, consider getting out even at a loss. If you can truly afford to hold long term, consider riding it out. But learn from this. Adjust your risk level. Don't make the same mistake twice. And if you haven't invested yet, think very carefully. Ask yourself why you want to. Make sure you understand what you're buying. Start small if you start at all. Never use leverage. Use secure regulated platforms. And keep the bulk of your money in safe traditional investments. I'm making this video because I care. I've seen too many people get hurt in crypto. I've seen families destroyed because dad or grandpa gambled away the retirement fund on some altcoin. I don't want that to be you. You deserve better. Your family deserves better. So please be smart, be careful. And remember that there are no get-rich-quick schemes that actually work. If something sounds too good to be true, it is. The tried and true path of steady saving and conservative investing might be boring, but it works. And sometimes boring is exactly what you need. Stay safe out there. Take care of yourselves and your money. And remember, the best investment you can make is in your health and your relationships with your family. Everything else is just numbers on a screen. Thanks for listening. I hope this helps. And whether you're in crypto or not, I wish you a comfortable and secure retirement. You've earned it.